good morning, everyone. I used to be fond of saying, whenever I come on and moderate, that my first task is to keep everyone awake. I just realized that I have a disadvantage compared with past years, which is that in our hybrid form, you don't have the benefit of coffee. In years past, you get some coffee outside. So I will redouble my efforts and keep everyone awake. But there is one good thing about the hybrid form, is that we start and finish on time. As one of the things I've learned about hybrid form seminars is because there are a lot of you on the screen, and so we try much harder to keep time. So I will remind all our panelists of that, despite all the insights that you have to share with the audience today. Today's title is dual circulation. Now, for those of you who don't study this in depth, I'm going to say a little bit about dual circulation, harking back to the days when I was a student of political economy. One of the things I found about practicing in Hong Kong and doing finance-related stuff, I do insurance law too, incidentally, whoever wrote my bio, is we don't actually spend that much time thinking about political economy. We think about business. Whenever we think about economics, we actually relate it to business. We don't actually relate economics as much to politics, to national development, to diplomacy, to do all those other things that I must say as an undergrad, I really enjoyed studying. And so when dual circulation, when President Xi announced the new national, it's not really so much a new national strategy, but a description of where China is going and China's place in the New World Order, I thought to myself, wow, this is a golden opportunity to think about political economy again. And for those of you who are not familiar with dual circulation, that is the domestic circulation and the international circulation, I would urge you to actually read some of the materials which the State Council has published that deepens what they mean about dual circulation. I did a refresher this morning, and dual circulation is actually underpinned by three things in one of the recent speeches by Vice Premier Liu He. First, it's by an active choice in changing between stages in China's domestic economic development. Okay, so it's domestic, it's the stage of the mainland economic development, but it's an active choice to change from one stage to another. So there's going to be an element of that. Second is by an increasingly complex and difficult international scene. And then there's actually a whole paragraph about how it's increasingly complex and difficult. But I was struck by how honest the diagnosis was. So may I suggest to the panelists today that gloves are off, real honest views. If the Vice Premier will call a spade, we certainly can do that. And the third is by the critical mass of the mainland economy itself. So again, recognizing that China, while technically, by a number of measurements, still a developing country, but because of its sheer size and speed of development, it is really a category of its own. So could I suggest to the panelists that those are some of the themes that we want to pick up today. Without further ado, I will introduce the panelists and we'll launch right to it. Lee Yuan Siong is the Group Chief Executive of AIA. Ed Moncreiffe is the current chairman of the Federation of Insurers. I also know him to be an insurer himself. Professor Tang of Hong Kong U Business School, but I happen to know that he's actually, like me, interested in political economy and not so much business. So we will be treated to some of the insights there. And at the end, Sally Wan is the Chief Executive Officer of ICSA Greater China. So with those things in mind, and keeping an eye on the clock, please, can I ask the panelists to each give us a short insight, and then we'll go further from there.
Okay, thank you, Laurence. I'm YS Yuan Siong, Group CEO of AIA. I'm a new member, relatively new member to the Hong Kong insurance community, having just arrived in March last year. Never realized, never expected that when I land in Hong Kong that the whole world will go into lockdown. So 20 months on the job, I've still not been able to visit many of the markets that I operated in, that AIA operates in. I think, but I'm very happy to say that over the 20 months, I've observed firsthand the resilience of the Hong Kong insurance industry. The Hong Kong insurance industry has recovered very quickly after a very short period of adjustment. And coming into 2021 and looking forward in 2022, I think the Hong Kong insurance industry has rebounded very, very well, despite the challenges of the pandemic. Hong Kong itself, I think, is very well positioned to benefit from the successful implementation of the dual circulation economic strategy. I think we know that Hong Kong traditionally has been the gateway to China. As we know, the dual circulation is both domestic circulation and international circulation. This is my very limited knowledge of dual circulation. And you can think of it as, that the Hong Kong is at the intersection of the two circulations. And we all know that if we sit at such a privileged position, you stand to benefit most from the opportunities that will ultimately come out of the successful implementation of these strategies. AIA is headquartered in Hong Kong, having been here for more than 90 years. We are not going anywhere, don't worry. Yeah. And I think we have been focused, we operate in 18 markets. Hong Kong and China obviously is the most important market for AIA, contributing to 50% of our business. The rest of the Asia is also very important. I think the structural drivers of growth for the life and health insurance industry in Asia remains very strong, and in fact have been strengthened by the pandemic. The pandemic has created a lot of challenges for all of us. It has limited travel, physical travel, but in a way I found that because of the pandemic, our businesses have been more integrated and much more better connected on the digital highway. I think this increased connectivity will augment and strengthen the implementation of the dual circulation strategy. Yeah, thank you.
Thank you. Thank you, YS, on a very positive note. But I'm going to spice things up. Eddie, I'm going to skip you. I'm going to go right to Professor Tang and get it from a sort of more macro view. We got a very positive view from a Hong Kong-based international giant insurer, lauding about how he's stuck in Hong Kong but still doing great international business. So tell us, is that true?
Well, first of all, it's my honor to be here with 4 distinguished speakers. I would say, first of all, I want to say, there's no new normal. There's no normal at all. Because, we live in a very uncertain time, which is actually great for all of you guys, right? Because, when there are risks, people will become more risk-averse, and they will buy insurance products. If I think of one sector that benefits hugely from the so-called new normal or the new world order, which is full of risks, geopolitical risks, climate risks, whatever you call it, I think this will imply more demand for insurance. But talking about Hong Kong, this is, I'm supposed to give a remark, but since you already asked me a question, let me say that we're all waiting to get back to our normal travel, business travels, travel for personal reasons. But without that, technology has been helping us a lot, right? So I think the silver lining of the pandemic is that this economy in Hong Kong, in the region, and not to mention Greater China, have become a lot more digitalized. With new technology, we would see also more opportunities in finance. Everyone's talking about fintech, as well as in insurance. Yesterday I just had lunch with a bunch of the business leaders, and they argue that they are waiting for the launch of the commercial data interchange, which is going to be launched by HKMA. And the use of blockchain, AI, and all sort of technologies are going to increase business activities and at the same time, importantly, data exchanges across border. So in addition to all the policies that are going to enhance more connectivity and integration between Hong Kong and the other cities in Greater Bay Area, I see huge opportunities, not to mention what Laurence already said at the very beginning, that this is the fastest growing region in the world, talking about GBA, talking about RCEP, as Dr. Moses Chang mentioned earlier. So I remain very optimistic about business opportunities. I remain more optimistic about integration between Hong Kong and the other GBA cities, which implies much bigger market for you guys, but also for talent from the north who can now, well, not now, but very soon will find it much easier to work in Hong Kong. But at the same time, the existing talent in this industry will have a much bigger platform to leverage on their talent and experiences, obviously, contributing to the growth of GBA and the rest of mainland China.
Wow. It's, I think, one of very few times I hear an academic say nothing but positive things. Are you tenured yet? Are you sure you can get away with that?
You want me to talk about challenges, right? I'm supposed to talk about challenges.
We'll turn to that in a second, but Professor Tang mentions data and technology. I did actually fight with the organizers today, wanting to actually moderate a later session before I got to know you guys. Once I got to know you guys, I wanted this session. Because there's a fintech session later, and I look at the title and I said, dual circulation. Yes, dual circulation is finance, goods, people, but the new circulation has got to be a circulation of data. And the dual circulation of data is actually possibly a lot more challenging and a lot more exciting than money, because actually circulation of money, we're reasonably good at it, and we know what to do, we know where the obstacles are, but we've heard two relatively positive opening. Now, Ed, you represent, well, you, the federation, represent everyone, both the firms and the individuals, the whole industry. Are you going to give us a slightly different take?
I'm happy to play the voice of the bear if need be. Thank you, Laurence, and thank you, Moses, for the kind invitation. I mean, as you mentioned, amongst other things, I mean, HKFI is the representative body for the insurance sector in Hong Kong. We have about 143 members across life, non-life, composite, and reinsurers. And we're very bullish, sorry to disappoint you, but we are very bullish on the dual circulation economic strategy, right? Because it's very important to our members, it's very important to the two key stakeholders we serve, which is our customers and our shareholders. And I think maybe if I can apply a more negative kind of view to that point for you, Laurence, is that when we look at our customers, Hong Kong is an inherently international city, as we know, it's an international financial capital, and our customers are or were increasingly international across all guises, and including more than 1 million mainland Chinese customers who purchased who purchased retirement savings vehicles, who purchased healthcare plans pre the pandemic. Now, those customers have bought long-term commitments from the Hong Kong industry that needs to be served, that needs to be serviced over many, many decades, and unfortunately, due to the current border controls, that is a challenge, and that's a challenge that we do need to overcome. So that is a problem. The servicing center in the GBA is a solution, but we need more, to be frank. And we shouldn't limit our view of international customers just to mainland Chinese individuals. It's commercial enterprises, it's corporate enterprises, it's institutional enterprises. And we help protect them locally, we help protect them trade internationally, and we help effectively manage their flow of capital across the region. The example that Moses gave earlier around the first ILS instrument, the first cat bond issued by a mainland reinsurance entity into the Hong Kong institutional investor market through the vehicle of a Hong Kong insurance product, is an amazing example, I think, of how Hong Kong can serve the needs and the customers of the mainland. And we've got to find more examples on that basis. And then maybe I just finish, to give another kind of maybe and sort of quasi-negative view, which is that Hong Kong is an incredible place to do business. Domestic economy is almost a wonder of the modern world. But from an insurance perspective, we do need to recognize that this has the highest insurance density in the world, has the highest insurance penetration in the world. What do our shareholders want? Our shareholders want a return on capital, and they want sustainable growth. Now, on our doorstep in the mainland is a market which is already 10% of global insurance premiums, and to your earlier point, it's still largely developing. So from a capital allocation perspective, the Hong Kong insurance industry wants to be part of that story. We want to be part of the liberalization, the ongoing harmonization of regimes, and we think we have, I think, a very valuable role to play in that. And that also includes freedom of movement of data as well, which I'm happy to talk about.
Well, not quasi-negative, in fact, pseudo-negative, not negative at all. What you have just said is on the international circulation front, we can do more, we have more to contribute, and on the domestic front, we want to be involved. Sally, we'll round with you and then we'll go deeper into some of these concepts.
Thank you, Laurence, and thank you for the opportunities. I'm honored to be here. So I think I just came back from Shanghai. I see that the Chinese insurance market is actually transforming. And there's a determination from CBIRC to transform the market into a more quality and diversified risk profile. So we see that from the 14th Five-Year Plan on Health and the very ambitious climate strategy. So the challenge is for Hong Kong insurers, there's over 140 professional insurance and reinsurance in Hong Kong. How can we help China and how can we help Hong Kong to diversify, provide different differentiated products and risk appetite so that we can help them to grow, especially also on the climate change. The second point that I want to highlight is we see actually many Chinese conglomerates, quality big corporates wants to go international, and how can we help them on the Belt and Road Initiative to go out and still connect them with risk and risk management and insurance. I think this is the opportunities and challenges for the Hong Kong insurers. Thank you.
Thank you, Sally. I was actually checking my notes to see that whether you are going to be speaking mostly about international circulation or mostly about domestic circulation. And it seems to me it doesn't even matter. You know both. And what you have said is actually the real excitement is at the intersect of the two. I earlier said I like the subject of political economy. The subject I like the least is biology. But when I heard dual circulation, I thought to myself, are we the heart or are we the lung? And both has a role in dealing with both the veins and the arteries, the active oxygen and the removal of carbon dioxide. That's probably the extent of the biology I still remember. But if I may push that further, it really is both. You can't do without either. With that in mind, nonetheless, I'm going to start with YS. For no other reason, because AI is based in Hong Kong, and so we start locally and then go to, as Sally said, Shanghai. So we'll go in distance-wise, both from me and from Hong Kong. From your perspective, first, welcome to Hong Kong, belated welcome. Sorry you are stuck, but great lucky us that you are stuck. Better you are stuck here than stuck somewhere else. So tell me, dual circulation, the CE earlier mentioned risk management hub. Some of the panelists has mentioned offering products into the Chinese market. Ed has also mentioned offering products derived from Chinese risk, from the mainland risk, to the international market. What do you see our role is and how can we do better?
Yeah, okay, thank you. Very happy that you recognize that AIA is a Hong Kong headquartered company. We are very proud of our roots in Hong Kong. And we are one of the very few insurance groups that has HKIAs or GWS supervisor. I think it's been working very well. The GWS framework is a very robust framework that will align us with global standards. So we are very happy that HKFI is our GWS regulator. I think very happy that you recognize that we are also a Hong Kong, Hong Kong company, and we hope that as we expand our business in the mainland China and across Asia, that Hong Kong will treat us as their domestic champion, just like we support our Olympians in the Olympics. Now, I go back to my point
Let me say, they are champions too. You remember, Hong Kong Olympians.
Domestic champions.
No, Hong Kong Olympians, Hong Kong Olympians just from the last Olympics included both locally trained and internationally trained.
Exactly.
That's what makes Hong Kong Hong Kong.
Exactly.
Our swimmers bears an Irish name, but is nonetheless one of our local champions. Let me correct you.
Exactly. Yep. And I think I go back to my point that Hong Kong has a very privileged position being the gateway to China. For obvious reasons, such a, and because it's a gateway, it has attracted international capital, talent, information, technology. And it's the conduit for all these to go into China. But because of the attractiveness of the China market, there are many other gateways that are springing up all over the place to compete with Hong Kong. So I think whilst we are in a very privileged position, you asked for some negative comments. So I think a word of caution is that we need to be very cognizant of why we are such an attractive gateway. What keeps us attractive? And I think in my mind, there are two or three very important factors. One is the openness. Now, you can't be a gateway that's very close. So how open is this gateway? And with the further integration of Hong Kong into the Greater Bay Area, I think the openness will only improve as we integrate further into the Greater Bay Area, as we allow much more freedom of goods, people, capital, and to a certain extent, information and data across the border within the Greater Bay Area and further into mainland China. But at the same time, I think openness is not just about openness with the mainland, but also openness with the rest of the world. So I think we do need to ensure that we remain very open to the rest of the world. So I think this is one factor. The other factor is that I think because of the position of Hong Kong, it has attracted a huge pool of talent, in terms of accountants, lawyers, corporate financials, securities analysts, portfolio managers, etc. And you find this nowhere else in the world, not even in the developing financial centers. I think this is a critical area that Hong Kong should be very proud of, and this is I think something that Hong Kong needs to protect, the development and the growth of a sustainable pool of talent. Thanks.
Thank you. Thank you, YS. You yourself, in many ways, embodied the international circulation. You mentioned your company is a domestic champion, but I would point out how open we are, which is we brought you into Hong Kong to head our domestic champion. Well, on that note, in a minute, I'm going to skip to Sally, which is local born, but we sent away to be our ambassador of Hong Kong insurance elsewhere. So that's really quite a story. Before I do that, we have our first polling question, I believe. And for those of you who haven't logged in yet, the QR code is either in a card like this or in your electronic program. And our first polling question is, which of the following would you see as the biggest business opportunity in the next 5 years under the international circulation strategy? And that is further liberalization, post-pandemic economic and trade recovery, growing concern over climate risk, or technological transformation of businesses. Actually, without us reading our notes, we have touched on all 4 subjects by now already. So I think a cheeky answer would be all of the above, but I don't think that's actually allowed in the polling. So you are forced to pick, prioritize what your gut reaction tells you or your considered opinion tells you to be the biggest business opportunity in the next 5 years. While we wait for that to come on, we're about to have it. Oh, 18 seconds. So gut reaction, sorry, well, we kill time. Sally, are we the heart or we the lung?
I think we're both.
Yeah.
I think those four actually are the top, but I have my own one or two that I would like to, I don't know whether I will confirm that in the polling.
Okay. I personally think we are the lungs. I much more fancy Hong Kong to be the lungs because it provides freshness to the body. The heart does hard work. All right, let's look at the poll results. Are we going to have that on the screen? Top choice is further liberalization. And then we have tech, and we have post-pandemic. And climate risk is a bit low. Oh, I know some regulators are going to be disappointed. Carbon and climate risk is something that you have heard Mr. Dixon earlier said. I know that climate risk is something that among the regulators, among the government authorities is very hot. I must say, I myself have always wondered whether that can be turned into business opportunities. So I'm not entirely surprised that it's the least of the four. Liberalization, so definitely. We also have the online. We have two versions. Well, online actually gives a fairly similar story. 41% liberalization, 29 tech, 21 post-pandemic risk, and then 5% carbon risk. So it looks like actually, speaking to a business audience, is the liberalization that they see the biggest opportunities. I'm going to pose that question to you, Sally, but with a twist. Kennedy said, ask not what your country can do for you, but what you can do for your country. I'm afraid the numbers here rather tells me that everyone is interested what your country can do for you. So in responding to that, could I also ask, surely, if you can't articulate what you can do for your country, what insurers can do for the mainland, you have no chance at getting liberalization.
So thank you, Laurence. I love the question and the tweets. Because it's been in my head, I was a bit surprised by the polling question because for myself, I think the climate is an opportunity and it's a big one. I can share a little bit of how we see that. At the same time, the liberalization obviously is going to really expand. And as I mentioned before, I think as an insurers in Hong Kong and professional insurers and reinsurers, how can we help the Chinese conglomerates and the corporate to go outside externally to help them to protect risk? Let me give you one example first, and then I talk about the climate a little bit very quick. So recently, in the past 2 years, we have set up kind of like an insurance hub in Hong Kong, and we have lined up, just recently, we have lined up a Chinese company who has a plant in Africa, and then we line up with the African entities so that they can be protected in the insurance in Africa. And in Hong Kong, we hub the risk in Hong Kong and share it back with our Chinese partners so that you can see actually these are the opportunities that is going to be there and it will be more. So I think all of us together, if we keep insurance in Hong Kong as a hub, provide capacity, we can support the growth and the liberalization. On climate, with the recent flood in China, we actually see there's a lot of that we need to help them to diversify the existing product and risk to actually include more risk appetite in liability, not just motor, but in liabilities and in health. And how can we bring in in the net zero climate, very ambitious climate strategy, actually we can bring in a lot of European experience, especially on electric cars, for example. Everybody is talking about it. That there is a 7 years experience of managing electric cars in Europe, and there's probably 1 billion data points, driving data points. The telematics, the parametrics for climate, we can use this as an opportunity to help develop the products in China so that we can bring in experience, data point, so that we can do insurance and reinsurance for them and help them to diversify the risk and help the government to achieve the climate strategy and to diversify with a more quality market. So this is what we as an international insurer can help and can do. That's probably answered the twist.
Yes, thank you. Thank you for the answer. But you also managed to loop back to data. And it reminded me that I guess after all, at the bottom of insurance is data, is that ability to assess risk. I'm a partly failed actuary. But exactly because that's the hard part, so I didn't quite manage it. Do you see, I want just a quick question for both YS and Sally. Do you see data going to be an advantage or disadvantage in us trying to participate in dual circulation? Sally has cited an example that it can be advantage because you're using international data to apply to the domestic circulation situation, or maybe locally. But usually we talk about data, we talk about both ways. So YS?
Yes, I think before that, I'd like to just respond to what you said just now about the polling result. That the fact that people chose further liberalization of the mainland China market as the top most important. And you said that, oh, this is because you like to do business. Actually, I don't see it that way. I see that through further liberalization of the mainland Chinese market, I think the government will provide the conditions for us to be able to contribute even better to the country. So it is, I think it's very aligned with what you say about what you can do for the country. If you think about the dual circulation economic strategy and this common prosperity, it's about creating a more fairer society, enlarging the middle class, growing the middle class. And to do that, I think insurance companies, international insurance companies have an important role, and Hong Kong-based insurance companies especially have a very important role to play to bring our services and products and our, helping, as we always say, our purpose to help people in China, across Asia, live healthier, longer, better lives. Yeah.
Thank you, thank you. I'm going to twist that a little bit. Hong Kong-based insurers. So it includes all four of you and your respective organizations. We're going to turn to domestic circulation because I did promise to keep an eye on time. And I'm going to kickstart that with our second polling question. This time, your choices are less restricted. The question is, what do you think is Hong Kong insurance industry's competitive edge in the Greater Bay Area? So what do you think is Hong Kong insurance industry's competitive edge in the GBA market? You can choose two, and the choices are product quality, competitive pricing, pool of right talents, customer experience and service standard, robust legal and regulatory regimes, and international connectivity. If I'm not mistaken, actually we asked this question last year, maybe even the year before. So if I'm invited again next year, could I ask for this question to be asked again next year? But next time, we will also see an evolving trend. Today, we haven't quite prepared for that, so we're going to get your answer and have it contributed to the trend. Now, the question is asked in a positive way. That is, what is our competitive advantage going into GBA? While we wait, Ed, let me ask the reverse question. What's the most difficult bit? What's our disadvantage in going into GBA?
I have to be careful what I say now. maybe frame it. I think we should never underestimate the growing level of international competitiveness that we've seen from other offshore international hubs like Singapore, but also more general insurance and reinsurance hubs across the world. And that, as Wai has said, that continuous competition for talent and for capital is immense. And I think the moment we stop focusing on that, there will be a problem. Yeah.
So don't just talk about competitive advantage and underestimate the competition.
Correct.
Professor, I'm going to come to you with a similar question in a bit, but we have the survey results, and we have, in this room, 38% say our biggest competitive advantage is product quality. I think that includes, I was about to say diversity, but indeed, in the bracket, the first thing is variety. Then 24% say legal and regulatory regimes, 23% say international connectivity. I'm going to read it both as opportunity as well as challenges, because we see B, C, and D pricing, talent, and experience and service standards as quite low. So it seems that there is some consensus that those are really no longer that significant in terms of any lead we have over our competitors. And online-wise, similar distribution, 24% product quality, 28% is legal and regulatory regimes, 27% is international, and then relatively low, I'm afraid, pricing, talents, and experience and service standards. So could I ask Ed, not just speak to the positive side of things, but also the B, C, and D?
Yeah, it's very interesting. I'm not sure I agree. Maybe I'll play the contrarian, but I think product quality is something which is inherently transient. Mm-hmm. So if that is our biggest competitive advantage, that is a problem, because products are easily replicated, in many different guises. And I think, especially if I look at the life insurance market here, and I look at Class C as an example, actually the rest of the world has overtaken Hong Kong over the past decade in terms of its ability to build, deliver, innovate on unit-linked and investment-linked frameworks, which every piece of life insurance product innovation in the past 20 years has come out of a unit-linked framework, whether that's US, Japan, Europe, and so on, right? So I think that is, if that's our biggest competitive advantage, I think that's a problem. My view would be that the two lowest scoring items are, to your point, Laurence, the opportunities and the worries. Mm-hmm. The talent question is an obvious one. If I compare, for example, the work we're having to do now to rebuild and to regrow the property and casualty side of the Hong Kong industry, and win back business from Singapore and other jurisdictions, that's because other jurisdictions have spent 20 years building up supply chains, building up value chains of brokers, reinsurance, modelers, experts, etc., SMEs, which is very, very hard to win back. So that focus on building talent and SME capability across the spectrum is critical, and that has to be an advantage here. And actually, the other one I would say was pricing, because my view to your earlier question, data in itself is meaningless, but experience is everything. Mm-hmm. And what we should have in this market is decades worth of experience, whether that be in solving for longevity, retirement gaps, healthcare gaps, nat cats, etc. So if we are not figuring out yet how to convert that experience into competitive advantage, both for the benefit of the mainland customers, the Hong Kong customers, and wider international Asian customers, then I think that's a big problem. So I think my view would be that pricing and talent are serious, long-term, systematic challenges that we need to turn into opportunities and strengths.
Thank you. Particularly, I know you haven't quite mentioned dual circulation in your response to the answer, but as I was listening to your answer, it actually struck me as what you say is exactly something that we need to bear in mind when we try to participate in the domestic circulation. Because I think it's wrong that we often think of, Hong Kong can participate in GBA, Hong Kong can participate in the domestic circulation as a kind of simply business opportunity. Yeah. Simply, let's sell the products I already have to them.
I mean, you said you're a failed actuary. I'm a failed economist, right? So I completely agree. If dual circulation is really hard, right? To grow consumption, you need to increase labor's share of GDP. You do that, wages increases, which mean your exports become less competitive. This is what Japan, Germany have been wrestling with for decades, right? So this is a case of our country needs you to come up with solutions. Again, why I said sort of common prosperity is one of the solutions here, right? So how do you rebalance income and wealth and thus increase consumption across the board? The Hong Kong insurance sector must be at that table, and insurance must be an arm of social policy to drive domestic circulation, especially in a market which, you know, if we're being honest, it risks becoming risk becoming old before it becomes rich. So we don't have a perfect Pillar 2 pensions regime here, but we have a pretty good one, and we've got decades of experience. We don't have a perfect private healthcare system, but we have a pretty good one, and we've got decades of experience. So again, our ability, to your point, is not just about capturing business, it's also about exporting knowledge, exporting data, exporting experience to the mainland. And I think other Hong Kong sectors, healthcare sector is probably a bit ahead of that in terms of facilitating construction of hospitals and healthcare centers in the GBA. I do think we in the insurance industry should be looking more through that lens. How do we export our intellectual capital, not just our monetary capital?
Wow, that's really heartening, and I'm glad to hear from the chair of our Federation of Insurers. He did preface it by saying he's a failed economist. I'm not entirely sure whether that's true or not. But let's hear from a practicing economist. What's your reaction to the numbers? Similar to Ed and mine?
I was truly inspired by Edward's comments. He said he failed economics. I think, you got an A just by saying, in order to increase domestic consumption, which is a very important part of domestic circulation, you need people to feel safe, to feel that, they don't need to save to prepare for risks. So on that, I think there will be policies. You can count on me, and you can invite me again next year and prove that I was right. That there will be policies, together with the common prosperity agenda, to release more saving to the economy. And part of that is to make sure that there are more people being insured. The penetration rate in Hong Kong is over 15%, if I'm right. If you look at the penetration rate in most of the cities in China, they're around 5 to 6%, right? So the market gap is huge. But in response to the polls, I was actually quite surprised that most of the participants realized that we are no longer the place to export talent to China. This used to be our competitive advantage, right? Working in a university, I have to say, our presidents in 8 universities have been trying very hard to recruit global talent to come to Hong Kong. And the obvious challenge, as all you know, is the housing prices. On that, I'm also optimistic in a medium run, not in a short run, that once the housing issues and other cost of living issues can be resolved, Hong Kong will still remain to be a very attractive place for a lot of global talent. And then on that, there got to be some synergy between mainland China and Hong Kong. In order to allow those foreign talents who can now work more freely in GBA, right? They don't need a new visa, they don't need to renew a visa every year. As long as they come to Hong Kong first, and we're happy to have them, but we're also happy to allow them to encourage them to go to different parts of mainland China. And this is the part of dual circulation that I think Hong Kong should focus on, right? We should be the global talent attraction for China.
So not a hoarder. We welcome you. We also would be equally happy to have Sally go to Shanghai to work. And I'm glad we managed to pull Sally back in time for him to appear in person. Now, we have some time for questions, but I know it will take a little bit of time for people to formulate their questions and type it on. So could I go back to dual circulation and ask each of you to give a quick reaction to what is the insurer's take to the dual part of the circulation? So what is the insurer's take to marrying domestic circulation with international circulation? I'll start with Sally, who embodies that because she just came back from Shanghai.
Yeah, so in Shanghai, we see actually not just the Chinese conglomerate, also the Chinese insurers is looking to diversify the risk really outside of domestic. So this is one
So
opportunity.
risk circulation is your
The
answer.
risk circulations from domestic to offshore, international, and how do we put our international risk hub in Hong Kong and share it back with the Chinese insurers. So actually the whole circulation come in a full circle where everyone, you know, Laurence, you talk about data. Actually, it's about insurance is about how do we make use of underwriting to really differentiate your product and add in new risks so that you can have a full circulations where you have experience from Europe and somewhere from AXA Group in Europe and circulate back to China, and the Chinese risk going offshore, and we can learn from each other. How do we make sure that we do a full circulations?
Okay. Now, I have some questions already. So before I turn to the question, YS, insurers' role in the dual, in marrying the two circulations.
Yeah, well, I think there are many roles that we can dive into, but I think maybe one which is not often talked about is the role of the way we deploy our investment funds, right? As life and health insurers, we accumulate a lot of funds. AIA manages close to $250 billion of assets. I think looking forward, I believe that the proportion of assets that we allocate to invest into the China economy, be it whether it is for our Chinese insurance company or whether it is for our own capital, will increase.
So
and it will be going into areas like renewable energy, long-term assets, providing long-term stable returns for our shareholders.
So investment circulation. I'm going to shy away from saying asset circulation because investment circulation, risk circulation. Ed?
Actually, YS stole my answer, right? So I think capital allocation, and again, the only way Beijing will achieve dual circulation is through more efficient capital allocation versus a inherently centralized allocation model. Now, the insurance sector in Hong Kong, based on HKFI data, collects 540 billion Hong Kong dollars of premium every year. Assume we perfectly match those liabilities, we're investing on average 270, 280 billion Hong Kong dollars into bonds every year. 30 billion US dollars into bonds. Now, why do we do that? It's not because we're getting a particularly good yield, and we're certainly not getting a good spread. We're getting it because we've got no incentive to invest in other long-term secure instruments. And I think with the cooperation of the IA and others, if we were able to be incentivized through capital relief or other measures to invest into the real economy, to invest into One Belt, One Road related infrastructural assets, then I think we could be actually at the driving, in the steering wheel of the domestic circulation capability that China can build.
Oh, wow. So you disagree with me that we are the lungs. You say we actually have the power to pump and be the heart.
We can be the bank account. Yeah.
Professor, quickly, before we turn to the questions from the
they already said what I wanted to say, but I think Hong Kong, the stakeholders, the government, policymakers, can take more initiatives, right? So I believe that we are not passive, and we should show our competitive advantage, right, in terms of capital allocation, in terms of talent attraction, in terms of taking advantage or leveraging on a deep financial market to help China to go out and to further liberalize the financial industry.
Okay, so we have risk circulation, we have investment circulation, we have the point that we have actually so much power behind the investment circulation, we can actually be the pump. And the professor points out that we are also a platform for a lot of other expertise and experience to be brought to bear. I wonder whether that, to some extent, answers some of the questions asked already. First one, how should we position ourselves and seize opportunities on the new landscape caused by the pandemic and geopolitical risks? So pandemic and geopolitical risks. Sally, since you mentioned risks, I just go to you.
Pandemic. Actually, pandemic is it's something that it's here. and it's here probably for some time. And I think that actually raised the awareness of insurance. And that's also raised the risk diversification capability that is needed for floods, for drought, for health. So I think this is the opportunity that we have to capture. I think also, this is also a challenge for insurance in Hong Kong. How do we capture that to make sure we support this pandemic risk emerging?
So awareness.
Awareness.
Speaking as an insurance user, I must confess, I find that a bit unsatisfactory. Yes, I can see the awareness. Now I see in the ads, people a lot more virtual insurers sell insurance. And I see that they say, oh, if you buy health insurance, you get a free health checkup. And that's very good marketing. But pandemic does so much more to us. The way we live has changed. And I would imagine the real answer is not awareness. The real answer ought to be, there got to be new products. For example, are there insurance products that cater to people working from home? Are there insurance products catered to people changing jobs and taking faster or shorter cycle to find jobs?
That is why this is a challenge for the insurers, to make sure that we diversify the existing risk categories, so something more diverse, including what you mentioned about work from home, and including the emerging climate risks. That is why the insurance sector has to be in the center of it, and we are well placed to support the government and the customers to do that.
Okay. YS? Risks.
Well, I mentioned just now, earlier, that the pandemic, changed the way we operate. Many companies have to adjust and move a lot of operating procedures and processes online. But that has also created opportunities, and I firmly believe that actually, and we have observed that the pandemic has actually strengthened what we see as the 5 key structural drivers of growth in the long term for life and health insurance industry, life and health insurance in Asia. So yes. It has created challenges for the operating environment, but it has also created, it has strengthened the drivers, especially in terms of the consumer mindset, and the pervasiveness of technology.
Okay, well, again, a positive spin on something that is yet to come. I hear from both of you that there are new things. We haven't quite figured out what they are yet. But then again, definition of insurance is you do have to have a number of people demanding the same thing for the risk to be spread around. So I'm cautiously optimistic that we will see more developments on that front. I'm going to turn to a question that is explicitly one to needle the panelist, to force you to say something that is, well, perhaps is something that everyone has in mind. How realistic is it for Hong Kong to even talk about positioning within the dual circulation economy? And the member of the audience points out that the Greater Bay Area, as an example, is a Politburo initiative. We talk a lot about Greater Bay Area here in Hong Kong. We talk about opening a service center. We talk about other things. But have we achieved very much? And therefore, how realistic is it for us to hope? I'm going to start with Ed.
Fair question. I think we probably need to assess GBA development through a wider financial spectrum, and acknowledge that from the insurance side, we are a little bit behind other financial sectors, and there are many good reasons for that. But I think if you look at Stock Connect, if you look at Bond Connect, if you look at the recently launched Wealth Management Connect, these are not sort of one-way arbitrary dictums from central government. These are pretty symbiotic with northbound and southbound flows that are marrying institutional and retail demand, both northbound and southbound. So I do think, and maybe it comes back to your earlier question, Laurence, that we've been framing the question the wrong way, asking what our country can do for us rather than what we can do for our country. But I don't see anything in terms of GBA development over the past 5 years that would suggest that this is difficult, let alone an impossibility goal to have.
Professor?
Yeah, I'm very optimistic. Maybe because of my training, right? Getting a PhD is very painful, and I could not survive if I'm pessimistic for 1 minute. The reason, getting back to this, the reason why I'm optimistic about this kind of integration, which is more about finance, insurance, and professional services, is because this is our strength. This is our soft power. If you look at GBA, they are strong in advanced manufacturing, innovation, maybe trade. So I'm more worried about the other things, right? Like trade, innovation, technology. I'm very optimistic about this because they need us in some sense. They need us because we have the experience, we have the connectivity, we have the one country, two system, right? So these are all the things that continue to make Hong Kong to be unique compared to other parts of China.
I like the way Ed mentioned that, yes, if we just focus on the insurance initiatives, then we're still getting there. But if we expand our view a bit and look at finance as a whole, there are actually other segments that, if we dial back the time 5 years, people were saying, well, not quite 5, 3 years ago, people were saying, is Wealth Management Connect ever going to come, right? When it was first floated, there were naysayers who say, oh, you'll never be able to comfort the central authorities enough about the flight of assets, so on and so forth. But it did happen, and it's happening at a scale that is huge. Now, yes, the investment restrictions are quite restrictive at the beginning, but we know from experience that those things are easy to relax. So by design, we can see where the direction is. So I too share what Professor and Ed have said about there is every reason to be optimistic. That is not to say we wouldn't keep pushing the regulators sitting in the front row and the government official to get it done. Sorry. Okay, now I'm going to turn to another question. And I will go back to YS and Sally. The question is, how do the insurance industry in Hong Kong and the mainland complement each other? Now, we've talked a lot about how we can contribute and how we can participate. We have discussed relatively less about how we can work together. So I'm going to, again, start with Sally.
Very good questions. Actually, it's very complementary. In China, there's a transforming market that is looking for risk diversifications. And in Hong Kong, we have the backup of the international, there's a lot of international companies here that can help the Chinese company to diversify their risk outside and go back with the international risk so that it's a full circulation. We are at the center.
Same thing. YS? Quickly, because I actually want a quick take from the other two too.
Yeah, I think I've been involved in China since 1994, and I've worked in China for the last 20 years. I think that over this period, I've seen so much exchange between Hong Kong and the mainland China. There's so much training of talent, mainland Chinese talent in Hong Kong. I've personally arranged many executives from state-owned enterprises, many officials from regulatory bodies to come to Hong Kong to be trained by Hong Kong professionals.
Ed, you earlier mentioned talent is something that we always have to work on. Is this partnership with the industry across the border going to help with that, or is it going to be further exacerbate the competition for talent?
I think it has to help, right? Mm-hmm. I mean, I guess my answer to the complement question would be, the holy grail for us to achieve is capital allocation northbound and risk diversification southbound. And for either of those to work, you are going to need cross-pollination of talent because ultimately they're local risks, they're local investments, and you will need local people, whether they're from the mainland or Hong Kong, with the experience and the capability to manage these risks. So it absolutely has to be symbiosis, exchange of talent.
Professor?
I want to say, the rest of the world see Hong Kong as part of Greater Bay Area rather than Hong Kong by itself. Maybe I study a lot about innovation and technology. many companies wanted to come to Hong Kong these days, not necessarily because of Hong Kong itself, but because of the huge market of 86 million people, right? So I think this is a perspective that we need to keep in mind. We think about how we in Hong Kong can contribute not only to the GBA development, but the entire national development. And once again, I think, in order to get work done, get businesses, we need what? Land, capital, and human capital. I think we have a lot of money, we have a deep financial market. The two things that we lack right now are the right kind of talent as well as land.
Wow. I don't know whether you guys have detected this. I myself took from this panel that it's really pooling. It's pooling of risk, pooling of investments, pooling of talent, pooling of opportunities. And you know what? It's not just blind pooling. It's not, oh, let's pool everything together. Ed just pointed out that in order for risk to be shared, you actually need people who are familiar with the GBA pool, as well as people who are familiar with the international pool. So, I didn't plan on coming off the panel feeling this optimistic. I hope you have gotten the same message, and let me say again that the next few panels are going to be just as exciting. I'm sorry we didn't get to talk about fintech and data as much, but there's a panel coming out. We didn't get to talk about carbon, green, climate risk as much. They will be covered later.